Hey, everybody. We are back for another episode of the Supply Chain Solutions Ship Show series. Today is Thursday, May 25th, 2023, and this is episode number 19 in our yearly series. So, we're going to get right to the business today, everyone. We have a very special show for you today, and we are going to give you a high level overview of all risk cargo insurance, and I promise you that after seeing our show today, you will have an understanding of the basic principles of shipper's interest cargo insurance. You'll have knowledge of cargo exposures, and you will appreciate the benefits associated with shipper's interest cargo insurance. Now, we have a very special guest today. Please join me in welcoming Tyler Salm from Roanoke Insurance Group. Roanoke Insurance Group, a Munich company, is a specialty insurance broker focused on surety bond and insurance solutions for logistics service providers, customs brokers, and companies managing supply chains. Founded in 1935, Roanoke was the first provider of customs import bonds as well as the first appointed ATA Carnet provider in the United States. Roanoke has for decades had a partnership with the trade community as a trusted provider of insurance, surety bonds, ATA Carnet products, and specialty services, and is a strategic partner with Supply Chain Solutions. Tyler is one of the premier sales account executives at Roanoke Insurance Group. He is a licensed commercial insurance broker, and he has provided insurance solutions to transportation and logistics providers to protect their business against risk within the industry, and has held various positions at Roanoke, including commercial P&C account manager, business solutions unit manager, and his current role of account sales executive. He is a graduate of the North Central College located in Naperville, Illinois, and we are honored to have Tyler join us today. So, everybody, get ready for a master class in all things insurance. So, Tyler and Jason, how are you and what's happening?
Well, thank you for having me. I appreciate it. And that was quite the introduction. That's very nice words. I appreciate that. Very excited to be here.
Thank you, Tyler.
Yeah, and for me, I got to tell you, this is a fantastic episode because the worst part of Anthony and my job is when something goes awry when shipping. It is something we dread, and you never know what's going to happen. So when we've got customers that don't ship with cargo insurance, we're kind of crossing our fingers that the stuff out of our control doesn't completely derail and harm our relationship with them, because it's painful. So I am especially excited to have Tyler walk through why it's important to have cargo insurance and also the situations where it can be very applicable in. So, Tyler, thanks so much.
Absolutely. Thank you again. I'll share my screen here with a little presentation we've got together here, if that's okay with you.
Please go for it and take it away.
All right. Let's see if we can see this screen.
Nice.
Does that look okay? All right. Perfect.
Fantastic.
Cargo insurance, everyone's favorite topic, right? Like you said, not many people have an understanding within the shipping world of just how important it can be. So that's what I'm here today, is to discuss that with you and, all of your clients. So as Anthony had mentioned, by the end of the presentation, some things we'd like, hopefully, for everyone to be able to take away is understanding the principles of shipper's interest cargo insurance, understanding the exposures and how those, coverages can benefit a shipper. Some core concepts to keep in mind, as you discuss cargo insurance. Supply Chain Solutions has a cargo insurance policy in place, but you guys do not sell insurance.
Mm-hmm.
You mentioned that I am licensed in commercial insurance. You have to be able to sell it. So therefore, it's an important distinction, for you guys, that you're not selling the cargo insurance. You are simply facilitating access to your cargo insurance. And, when I discuss it with clients, I like to say you're the travel agent. You know, if you back in the day wanted to go somewhere, you talk to the travel agent, they set you up and they book it for you. It's kind of the same concept here.
Absolutely.
So the way it kind of works as far as how the insurance is broken down, you know, you have your insurance policy through Lloyd's of London. We, as the broker, Roanoke, got that for your company. You purchase that policy, and then you can facilitate that out to all of your shipping clients, you know, to insure them as their goods move. So what is an open cargo policy? It's a common question. It's a broad insuring condition policy. It allows you to insure a variety of different, you know, commodities that your shippers may be shipping across the world. And you can do this on a shipment by shipment basis, which is the nice part about a open cargo policy. So where does coverage begin? Where does it end? This is a question we get all the time. You know, where does my liability lie? So with an all risk cargo policy, it starts at the seller's facility and it ends at the final destination. And, you know, there's obviously some points in the middle that they can stop off at, all of which are covered under an all risk cargo policy. So from point A to point B, your cargo is covered for full value, as long as, of course, it fits the policy terms and the policy limits.
And Tyler, isn't that all risk cargo insurance policy the most comprehensive shipping insurance available?
Absolutely, it is. If you can, you know, if you're going to get cargo insurance anywhere, all risk coverage is what you want to look for.
Okay, that's great because as we all know, you know, it helps us cover that physical loss and damage of any external causes that would be covered under the policy. So it's really important to have your you know, your cargo insured. But go ahead,
Yeah.
Tyler, back to you.
In a lot of real quick, and it's also very beneficial for us if, you know, we are shipping with you, because when it gets to, generally speaking, because we obviously have a massive warehouse network, a lot of our customers use that warehouse network. So when the cargo arrives at our facility, we can do that inspection and ensure everything's all right and be that checkpoint for you. We've already got different processes in place for, you know, certain companies to ensure everything's up to snuff, and then we can kind of check it in, and then, you know, it's on our shoulders from that point on, which is great.
Absolutely. So just to break down the all risk piece of the cargo insurance here, you know, it covers physical damage, loss or damage rather, unless it's specifically excluded from the policy. So if you don't see an exclusion on the policy or a limitation or restriction for that commodity, then under the all risk, it is an insurable commodity. You know, it is the most common coverage type when we talk cargo insurance. It does, as you mentioned, provide the broadest coverage. Some things to note as far as what might commonly be excluded or restricted under a cargo policy are all these points down here. Obviously, packing is very important. If it's not packed properly, you know, you run the risk of a claim not being paid out. But this one right here is what I find to be most important, providing timely notification of a loss. You know, if you get a claim in and you realize you have a claim or a potential claim on your hands, you want to advise us as your insurance broker immediately so that we can, you know, get out ahead of it, make sure we're getting the right documentation in place and making sure we can pay you out in a timely manner. Another part or section of cargo insurance is FPA coverage, which stands for free of particular average. So this would be the opposite of all risk cargo. This would be you're only covered for very specific perils. And if it's not listed on your policy as being covered, then it is excluded from coverage. So what FPA coverage does, and, you know, we see it a lot with used goods, bulk products, on deck bills. They're going to limit the coverage to, it's only going to pay out claims in the event of a total loss, unless, however, a ship is stranded, sunk, burned, jettisoned, you know, there's a crash, a collision. It has to be a catastrophic loss in order for a claim to be paid out, unless it falls under one of these perils here.
That makes sense.
So how do we ensure the valuation for cargo? It's going to be the commercial invoice plus freight costs. And then we also offer a 10% allowance. We call it the CIF plus 10%. And what that 10% does is it just gives you a little buffer room in the event you have unforeseen charges. The freight charges could have increased along the way at some point. Any unforeseen charges within the realm of shipping that product, you get a little 10% buffer. So in this scenario here, you have an $80,000 invoice, $10,000 in freight charges. If you want the 10% allowance, you're looking at $99,000 of insured value. And important thing to note here is the rates are applied per $100 of insured value.
Nice. That is a good page breaking that down.
Some best practices when you're shipping cargo, especially as either the seller or, the receiver of the goods. When it gets to that final warehouse, you want to accept delivery and document the condition of the cargo right away. It'll help you to minimize your losses. In the event that you do find damage to cargo when it arrives, you want to preserve packaging, seals, take as many photos as you possibly can. All of that's going to help out in the long run when it comes down to the adjusters and the surveyors coming out. The more you can provide to them to show, here's the damage, here's where we think it happened, the better off you're going to be as far as getting your claim paid in a timely manner. Some of those documentations I mentioned, it could be a whole laundry list of them, but some common ones that we're going to need, of course, the master bill, a house bill, the freight invoice, any delivery receipts and whether or not they're signed, commercial invoices, packing list. This is very important when it comes to paying out claims, especially if you're moving multiple pieces, on one shipment. You're definitely going to want to provide a packing list. And again, those photos can help dramatically when it comes to processing claims because it gives a better picture of what happened to the goods to those adjusters and surveyors. And then you're going to want to put all the carriers on notice. Any carrier that was involved within the shipping, point A to point B, you want to put them all on notice and let them know that there was a claim.
Mm-hmm.
So the important question here, why is cargo insurance needed? You need to protect your assets from physical loss or damage. We show these pretty pictures here all the time. This is no joke. This happens out on the sea all the time.
Mm-hmm.
These containers fall over, they fall overboard, they get jostled around, and damage does happen. A couple examples of, physical loss and damage. Between 2008 and 2019, there was an average of almost 1,400 containers lost at sea each year. Some examples here that you guys might be familiar with, you may have seen throughout your careers. The MV Rena, the MOL Comfort, the El Faro. And then between 2020 and 2021, that number increased quite a bit. This is one we might all be familiar with, the one Apis, 1,800 containers overboard, the Maersk Essen, 962 containers overboard. So, these things do happen, whether we want to believe it or not. It's not a matter of if, but when.
And
it's properly covered.
It's interesting because we had the New Jersey operation for Supply Chain Solutions had 8 containers on that one Apis, and that was really something, and we did have the goods insured, but our clients still couldn't understand why it took them so long to get paid. It had to divert to Kobe, Japan, and then they had to have insurance surveyors there, and they had to safely, inspect the vessel for damages and the cargo. I mean, it was really a long process, as you're well aware. So that definitely remember that one.
Right, especially when it's a matter of so many containers on one ship. I mean, that process could take months, maybe years even. So
yeah.
Another important piece of why cargo insurance is important, you really don't want to rely on carrier liability if you can avoid it. There's all of these conventions depending on how you're shipping. For the ocean carriers, it's COGSA. You're going to be limited to $500 per package. For international air, it's the Warsaw Convention. It's about $9 a pound, or approximately $20 a kilo. And then when you're talking domestic, the Carmack amendment, 50 cents per pound of whatever you're shipping. So
Yeah.
if you're shipping iPhones and you're only getting paid out 50 cents a pound in the event of a total loss, that doesn't really cover much for you. You really need the all risk cargo insurance to protect it for that full value.
Absolutely.
And I
Go
want
ahead,
to
Jay.
mention something because, we've had situations where we've had to deal with air freight claims numerous times, and it can be, if there's no cargo insurance, it can be really tough, even if the damage seems very clearly done by the airline, for them to admit fault. And we've had numerous situations where we're seeing it. We're like, this obviously happened at the terminal or, in the loading of the plane process, but still, we weren't able to get that paid out. And so, that's why, what I said in the beginning too, when we've got shippers with highly valuable goods, especially when cargo insurance it's very reasonable, unless you're shipping something like glass, right?
Right. Yeah.
In that situation, maybe a little bit less reasonable, but very reasonable. It's not a fun moment for Anthony and me when we've got to make that phone call and kind of talk about, okay, what we're going to have to do and how we're going to have to go through this process given the lack of insurance.
Yeah,
Oh,
and
yeah.
what's interesting is, we just captured a new client yesterday that brings in, cargo for physical therapy, stretch bands and OptiBalls and other different products, and they had about $85,000 worth of merchandise in a 40-foot high cube container. And I said, you really should think about, letting us facilitate insurance for our insurance company, Roanoke Trade, because per the legal limit of liability in the contract of carriage, if something happens, you're only getting $500, okay, essentially. So this
Right.
is such a great slide, Tyler. Really.
Yeah, it is.
Well, thank you. Yes. And, it's not everyone kind of understands these conventions as far as, everyone expects, oh, there's a claim, I'm going to pay it out for the full value of it. Well, probably not unless you got the all risk cargo insurance in place, unfortunately. So some exclusions to carrier liability if you do ship through a carrier's insurance and rely solely on that. There is no coverage under carrier liability for acts of sea, or accidents of the sea rather, acts of God, criminal acts, fire, theft, general average, which is a very important one we'll get to in a few slides here. But these carriers' policies all have all of these exclusions to where you don't even realize it until it's too late. There's a claim and they're denying your claim. I mentioned, natural disasters is one thing that is excluded from carrier liability. If you're shipping to the East Coast here, you can see 8 of the top 10 aggregate losses have occurred within the past decade, and 7 of those have affected the U.S. directly. So, hurricanes on the East Coast and down in the Florida area, that's not covered by carrier liability. It is, however, covered under an all-risk cargo insurance policy.
Yeah, that's a great heat map. And, it's interesting because, again, I was just talking to one of our clients yesterday and they said, hey, what happens if I don't want to insure my cargo for the full value? And I told them the short answer is you might have to pay out of your own pocket for a share of the loss. So the valuation is really a critical consideration for shippers and cargo, owners when you think about insurance. And I think it always pays to make sure you insure all of your cargo. Sometimes people, as I like to say, they want to squeeze the eagle on the quarter till it screams because they think they're going to pay so much in a premium and it doesn't really make sense. But back to you, Tyler.
Yeah. And unfortunately, with these losses, it's until it's too late, you have no idea. So
yeah.
I'm biased, of course. I work in the insurance industry. I think you should insure, if you're a shipper, all of your loads. That's not for me to decide, but I've seen too many things in this industry to where if I were that cargo owner, I'd insure every single shipment I have.
Build it into your cost structure. You know what I mean?
Yeah, of course. This is another little heat map for theft between January and December of 2020. Again, this East Coast area seems to be kind of a hot spot for it, down in
Yeah.
Florida as well. Again, theft not covered by carrier liability. Again, it is, however, covered by cargo shippers interest, all risk coverage.
Mhm.
Interesting. And I just want to interject with one more thing, Tyler, real
Please.
quick. I know you want to get through some of your slides.
Not a problem.
One of the other things is I had a client ask me last week, what if my freight carrier has insurance? Why do I need it? And I explained to them that for starters, the freight carrier's liability typically is limited to some amount per package, per pound or another measure. And secondly, the limitation in any insurance that the freight carrier might have might have been likely much less than the shipper's potential loss. So, that's a question I get a lot. Well, our carrier has it. Why do I need it? So.
Mhm.
And further to that, I'd say, I'm just guessing at a number here, but probably 85% of carriers only have a $100,000 limit for their cargo insurance. Even
Wow.
if you can get them to pay out the full amount under their policy, if you're shipping over $100,000, you're still not getting paid out the full amount. So,
Yeah. I had no idea. It's interesting. Interesting. Okay.
yeah.
Great information.
Some top commodities that we've seen over the past few years that are susceptible to theft. Food and beverage, very high up on the list. Agriculture, and of course electronics. Construction materials, especially as we've seen over the past couple of years, the prices on construction materials increase. Fuel, autos, and then over here is the type of theft that we are seeing most often in the industry. Hijacking and then just theft from facility is very high up there. Again, if you're insuring under a cargo all risk policy and the goods stop at a warehouse for consolidation, that's still covered under your cargo policy. So if it gets stolen from a warehouse, you're still covered under your cargo policy for the theft.
Mhm.
And down here is just top countries. I don't think. Well, there's some that might be a little surprising, but Brazil, India, Mexico. If you're ever shipping to these areas, the cargo policy is going to have some exclusions or restrictions as far as where you can ship within there, when coverage ceases. Germany, that's a little surprising to me, and then U.S. and U.K.
Same here.
Interesting.
Yeah, that is surprising to me too.
So I mentioned general average a minute ago. If for no reason other than general average to get a cargo policy, this should be enough for you to consider insuring all of your goods.
Mhm.
I showed you the picture of that ship with the containers falling over. I believe the one APIS might have been a general average claim, but what it is
Yeah.
if there's a total loss of a ship out at sea, there's going to be a shared responsibility to pay back from everyone who had goods on that ship. So even if you only had one container on the ship and that whole ship goes down, you're going to be responsible to pay a portion of whatever cargo was lost, as well as the damage to the ship itself. So, if you only ship a $20,000 load, but you get hit with the general average, you're going to be paying out much more than $20,000. And if you don't have cargo insurance placed on those commodities that are involved in general average, you're paying out of your pocket. And you're going to be wishing that you had gotten cargo insurance.
Yeah.
If you do place cargo insurance on a load and there is a general average, your cargo insurance takes care of it. You don't have to pay anything out of your own pocket.
Jay, go ahead. I see you have a question. Go ahead.
Do you remember the Evergreen in the Suez Canal?
I sure do. Yep.
They declared general average on that one as well.
And I got to tell you, on the Apis, as I mentioned, we had a bunch of containers on that ship, and when our client found out that they had to pay a portion of everybody's, I hate to say it this way, they just freaked out. So we actually had to go visit them in person to talk them back from the ledge to make them understand. But I'm like, look, you're okay. You've got insurance. We insured your shipment, so rest easy. It's stressful, but you're going to be okay. And eventually they were made whole. Yeah.
Of course, and again, it's going to take a little longer than a normal claim would. These things, like I said, can get dragged out for quite a while, but you'll end up being made whole again through the insurance. Absolutely.
Yep.
General
Here's
average.
just another, I think this one ended up in a general average as well. We don't like to think it, but these things happen more often than we believe they would. So a little more on the general average. What happens in the event that they do declare a general average? All the freight gets seized. There's a deposit assigned, which is usually 8 to 12% of the cargo value. And then the value of the voyage as well. It's vessel plus the cargo. So like I said, it's not just the cargo on the ship, it's that vessel that's moving it as well.
Right.
So each cargo owner's participation is going to be determined by their individual value of goods plus whatever the voyage value is. They do the math on your value plus total value, and that's what you end up having to pay out for the general average. So, it's going to be more than if you were to just lose your container of goods. You're going to be paying out more than that, and the insurance is in place to protect you from that.
Yeah.
And that is all that I have as far as my presentation goes. Did you guys have any questions that you had for me?
Well, I actually have a couple. I'll go with my first one if Jason doesn't mind. So, we really, our director of marketing, Vanessa Fry, is just a magic maker, and she really got the word out on, you joining the show today and having this sort of little master class on cargo insurance. And one of my clients contacted us and said, "Hey, we really only do business in the United States, but do we really need ocean cargo insurance?" And that same client actually ships a lot of its products to Alaska, Hawaii, and Puerto Rico and some other locations. And I tried to explain to them, and I just wanted to see if you would agree that, I told them that whenever products are transported through international airspace or international waters, the shipper has marine cargo exposure. So there's that word again you were talking about, Tyler, in the beginning about, the exposures, right? And, this is a question that, really needs to be addressed and needs to be identified on the front end when we're speaking to our clients, because a lot of people didn't realize that. So I just wanted to know, if you had any thoughts or did you wanted to add on that?
Yeah, so it kind of depends on how you're shipping. You mentioned Alaska, Puerto Rico. You can do domestic air shipments. So if you're going to Alaska by air, you can have it under a domestic rate. But if you're moving it on a barge or a ship in the water, you really should have the ocean cargo insurance as well, just to be safe. I don't know. You might be able to truck up to Alaska. I'm not familiar with that territory much, in which case that would fall under domestic. But simple rule of thumb really is if it's going in the water, you want ocean cargo insurance.
Yeah, and I have another one real quick if I can jump
Yeah.
in. So another question we got, and a lot of clients that we have up here in the Northeast region of the states, they like to call it motor truck cargo insurance. So they asked us, like, isn't ocean cargo insurance basically like motor truck cargo insurance? Like when we're insuring a shipment on a a 53-foot trailer or an LTL shipment, And I tried to explain to them that no, it sure isn't. And you might want to think that cargo is cargo, but no matter the mode of transportation. But in fact, ocean cargo insurance is really distinctly much different than motor truck insurance policies. Can you give us any background on that kind of a scenario?
Absolutely. So, and it gets confusing because there are so many different cargo coverages out there. Motor truck cargo is specifically for motor carriers. That is the cargo insurance they have in place to be able to put loads in the back of their truck and move it across the road. That does not protect. I mean, they can use their insurance when they're shipping, your shipper's goods, but that's only, again, going to protect you up to a certain amount. The cargo all risk cargo insurance is a complete separate policy and coverage for motor truck cargo. It's intended for the full value of the cargo, whereas the motor truck cargo that the carrier has limitations as far as limits and commodities and all that stuff. So the truckers need the motor truck cargo, the shippers need the cargo shipper's interest.
Interesting, really interesting. And I have one more. I know I'm taking up maybe some of Jason's airtime. You might have a couple questions, so this will be my last one. I had a whole bunch of questions prepared for you, Tyler, that I've gotten from some of our clients. So, with everything going on with all the geopolitics and the conflict in Ukraine, a lot of our clients reached out and said, hey, we know that wars cause damage to cargo. And I think, they wanted to know some of those dynamics about, I think in most property policies, the war risk is included, especially I think in all risk marine cargo policies. However, I'd like to confirm with you, is the war risk covered under a separate policy form? And what can you tell us about some of the stuff when it comes to war risk cargo?
So it would be covered under the cargo shipper's interest. And actually, obviously the war-stricken areas change over time. So every year, we get a list of what countries are considered the war-stricken countries, and they're obviously excluded from coverage. That doesn't mean, however, that we're not allowed to ship there at all. What it means is that if you need to ship to one of those specific places, Ukraine is a good example. I'm not sure that you could ship to Ukraine at all right now, but
Right.
let's say somewhere in Afghanistan, and that's considered a war-stricken area, our underwriters will do what we call a special quote for that shipment if it's going to that kind of area, and they'll apply an additional rate for war coverage. So if you're shipping there and you get the additional war rate, then you're covered on your goods for war.
That's great. That's great. And Jay, go ahead. Did you have
Yeah, I actually got a couple texts from someone who's watching. So Tyler, you and me talked about this. We used to have the live questions, right? But we haven't quite figured that out yet. It'll be back. But it's funny because someone's watching. They're like, hey, ask this question. Yeah. Okay. And I actually just shot back a response because I know this is going to be real case by case. And I'm not really positive how much you'll be able to break this down. But their question is about, some of the situations where cargo insurance won't apply, and it's specifically for improper packaging. So they were essentially asking, hey, how do I make sure my packaging is proper? So if I'm in a situation where there is damage, that I don't have to have that issue of, I guess I didn't package it or load the container properly.
Short answer to that is, if you're unsure, ask your, if you have a customer that's shipping under your policy, they can ask you and you can ask me. It really depends. When we get the application from you guys to put the policy in place, and you provide a list of commodities that your customers are shipping, one of the questions on our app is, only if we see something out of the ordinary, well, how is that packed? Mm-hmm. And if you provide that to us on the application, we have an understanding already. Hey, this is how things are going to be packed. This is how they're moving. And then if you do pack it in a different way, you just want to really make sure that it's an okay method of packing. So short answer is just ask the question. If you're doing something outside of your normal operations when it comes to the packing of the goods, just ask. Never hurts.
Awesome. Absolutely. Awesome. Jason, go ahead. Back to you, my friend.
Yeah, and this is more of a statement. So Tyler ran through a list of required documents in a situation where a claim is needed to be filed. And I just want to, it can look very daunting, but if we're doing full supply chain management for one of our customers, more than 90% of that, literally about 98% of that is handled by us. We've got the photos, we've got all your documentation. We will facilitate that. Whenever you're needed, we'll involve you, but it's going to be very handheld, that process. So, yes, while it is a lot of information, and yes, you need to have your, ears perked up in case we need you for something. Generally speaking, we handle most of that and we facilitate the claim. So, don't be too daunted by that screen.
Well, Jay, that's a great point. And I have something else I wanted to ask Tyler as well. So a lot of time we go out and we visit potential clients, and, we always try to facilitate insurance on their behalf. It's, it's a value add from our perspective, right? And it protects the clients and the potential client. And a lot of times people will say, well, we have our own policy. And they feel so confident that their policy is going to cover every scenario. So, and I found that sometimes some of these policies, we have one client up in Brooklyn, and he's like, our policies with Travelers. And I'm like, yeah, but I don't know if it's quite as comprehensive. Can we take a look at it? Let us take a look at your policy. We've been partners for a long time, right? Any advice or sage advice or, anecdotal comments about, when someone tells us, hey, we have our own policy, is there any hot button things we should think about, that we should maybe counterpoint them and say, hey, well, you really should let our partner, Roanoke Insurance Group, take a look at your policy because you could have some gaps, in your coverage.
Right. And you never know, especially if you're not an insurance professional. You just get a policy from a broker. You don't really know what it is you're looking at, what you have. So, one point to that is if you think that you're underinsured in some aspect as a shipper, reach out to another broker, ask them for their opinion, ask them to take a look at it for you. That's something that I offer all of my prospective clients. If they're like, I don't know if we're insured correctly, let me take a look at the policy. I'll let you know how you're insured. Secondly is, they can have their own policy and that's all fine and dandy, but the value add that you, supply chain, as a forwarder, add to your shipping customers is really where the difference is. Nobody wants to deal with claims. If there's a large claim, that shipping customer is not going to want to deal with that. That's why they come to a forwarder like you guys who facilitates all of that, and you take care of all of it for them. They don't have to get into the weeds with it.
Thank you, Tyler. Jason, back to you.
Yeah, I want to kind of piggyback off something you said, Anthony, because we do try to get all of our customers set up with insurance because it's also a relationship add to us, because it's a service we can provide when something goes wrong that can make sure we maintain a healthy relationship. I mean, nobody likes to forfeit thousands of dollars worth of inventory. I mean, just at the end of the day, and having to be a party that was signing off on shipments and actually facilitating a shipment and having that happen, that sucks for us. So
Right.
we definitely try to make sure that, everyone's understanding, the cost to benefit of insurance. And, I know Tyler's presentation today really did a great job of outlining the circumstances and also, the commonly heard things that Anthony and I hear, which is, the carrier has coverage. And we've seen it go so sour, even when it is so clearly not going to mention any names, but fault. And so, I just, Tyler, I want to thank you very much for everything today. And I also want to make an announcement. It's this man's bachelor party this weekend. He's about to get married. So please shoot him an email and say congratulations.
Thank you. I appreciate that. Listen, this has been fantastic. I love everything you guys are doing over there with the podcast. It's fantastic. Thank you again. And I hope that everyone learned a thing or two. So,
oh my God, it was amazing. It was truly a masterclass. So for all of you out there listening to today's show, please make sure you reach out to Jason and I. Tune in each week for the Ship Show. Next week, we have the FMR, the Freight Market Roundup. And listen, you guys are, to all of our listeners out there, Supply Chain Solutions has the premier partner in insurance coverage for all risk cargo marine insurance, for all types of insurance for your supply chain. And it's a great 1-2 punch, Roanoke and supply chain. So, you guys would be not doing a great service to yourself if you didn't work with us and become part of our family. So Tyler, I can't thank you enough for being part of today's show. Jason, as usual, you're always hitting home runs. And as we like to say at the end of our show, make it a great day and a great week. And remember, Supply Chain Solutions and Roanoke Insurance, the best 1-2 punch out there in the industry today.
I love it. Thank you all.
Thank you guys. Appreciate it.
Take care, guys. Make it a great one.